morning. Welcome to IG's early morning call. It's Friday, the 31st of March, as we approach the final trading day of the quarter. Let's take a look at the headlines as the European market's expected to open slightly up on the session today at two-week highs. And I should also say as well, we're looking at the end of the month where we're looking down because of the banking crisis pretty much across the board. But gains on the quarter, that's certainly looking as though that's going to be likely in terms of the European markets at least. And it's the second quarter in a row of gains for the S&P 500, which is it's never been seen before in 50 years of recording bull and bear markets. Nikkei gains on upbeat data, industrial output, retail sales topping estimates. We'll take a look at what's been happening across the Asia-Pacific markets. And we've got a rally in soft commodities. Is it all to do with climate change? Let's take a look at what's happening on the volatility markets. We're up for a second day in a row. 2152 is where we're trading at the moment. It's not a big gain. It is only a small retracement of the losses that we've seen recently. In other words, money going into these equities. And this is the picture as we go into the start of today's trade across the European markets. FTSE 100 at 7620, holding on to pretty much all the gains we've seen over the last couple of days, actually, for the London markets. As I said, on the quarter, we are up. But on the month overall, it's been a little bit more difficult for the month for the markets. German DAX started the month, let's take a look at where we were at the beginning of the trading month, where we were at 15,327, 15,541. So we're looking as though we've got gains on the month overall for the German DAX. The DAX up at 15,542. Same sort of picture for the French markets as well, with those two strong days of gains we've seen just in the rearview mirror. Today, we've got a new two-week high. In fact, the highest now in 3 weeks, 9th of March 2023, is the last time we were at the levels that we've seen intraday in the session today. We are just shy of the 7,300 mark for the French CAC 40. Let's take a look at what's happening overnight in the Asia-Pacific markets. As I said, we've seen some encouraging economic data out of Japan today, the Nikkei 225 benefiting from all that with a rise of 0.9%. Money going into the Hang Seng Stock Index as well, and also closing out on the quarter with the day of gains for the ASX 200, the Australian benchmark, up by a margin of 0.75%. Let's remind ourselves of the Wall Street close yesterday. Just one market I really want to pull out for outside performance, and that is the Nasdaq Composite. It's up, or was up, 0.75% in the session in yesterday's trade. If I show you what's happening on the markets at the moment, we are down, we've got a red candle, but we've seen a new higher high today for the Nasdaq, taking us back to levels not seen since the 26th of August last year. And the Nasdaq really has been a stunning outperformer for the year overall. From the lows to highs, we're up 21.95%. For the month overall, from where we were at the beginning of March, that's the candle we were at the beginning of March. You can see stunning gains for the month overall. So tech stocks have been the place to be. Let's take a look at what's been happening in terms of some of the economic data out overnight. I want to begin, first of all, in Japan with that Nikkei 225 in amongst the better performers overnight on the Asia-Pacific markets. Let's take a look at what's been happening in the macroeconomic picture. We've seen a number of figures come through. Industrial production up 4.5% in February compared to January. Leading the rise was car production up 15.4% as the shortage in semiconductors eased last month, meaning that some of the bottlenecks have been opened up. Retail sales increasing by 6.6% in February from this time last year, logging a 12th straight month of gains and above the median market forecast for a 5.8% gain. The unemployment rate unexpectedly rose 0.2 percentage points in February to 2.6%, worsening for the first time in 5 months, so showing that more people are unemployed in the Japanese economy. All this coming as the International Monetary Fund said the Bank of Japan should avoid a premature exit from monetary easing and outline conditions of raising its negative interest rate in order to improve its communication with the markets. Let's take a look at what's been happening with the Japanese yen. This is the dollar, excuse me, this is the dollar up against the yen. Now, when you look at the picture for the dollar overall, which is a weakening picture, it's interesting to see that the Japanese yen is weakening against that US dollar. 132.95. I'm not completely convinced this is necessarily a trend that's going to continue. You can see the shape of the candle we've got today is a lot of upside wick, which indicates to me that there's quite a number of people want to sell in to these highs, the highs we've not seen in this market since the 17th of March. It's not, as I said, it's not a spectacular rally we've seen, but it is nonetheless a move up. And we're being held up here with a 50-period moving average, just around about where we're trading there at the moment. Talking about data out, China's manufacturing activity expanded in March for a third straight month, although at a slower pace than in February. These are the official NBS manufacturing PMI numbers, coming in at 51.9 after reading a 52.6 in February, but it exceeded expectations of a 51.5-point print. The services sector was stronger, with activity expanding at the fastest rate in nearly 12 years. Non-manufacturing PMI jumping to 58.2 against 56.3 in the month of February. We've just seen some breaking news on the UK economy, and it is final confirmation that the UK avoided recession in the fourth quarter of 2022. The third quarter had seen negative growth. It was only by the slimmest of margins, but the markets have been looking for something a little bit weaker, flat. We got a 0.1% expansion quarter on quarter, year on year, a 0.6% rise. All this comes as the UK nationwide house price index has come through, falling 0.8% in the month of March, month on month, and 3.1% year on year. Of course, that represents more up-to-date data than we saw on the GDP print, which was the back end of 2022. But in February, was a 1.1% pullback in house prices, according to the Nationwide. So this fall of 0.8% sort of consolidates the view that Nationwide's numbers at least are looking at a contraction month on month for the UK housing market. Let's take a look at what's been happening with sterling. Sterling's benefited from dollar weakness, and indeed in today's session, we've got sterling up at levels at the moment not seen since the 26th of January. This is really quite an impressive move, not too far away from the highs that we saw back on the 23rd of Jan at 124.46, 123.89. Much of this move has to do with what's been happening with the weakness in the US dollar, and the US dollar market, as I say, showing their losses that we've pretty much not seen since the 3rd of Feb. So this dollar weakness is making itself felt across the markets, including this euro dollar trade. I'll take a look at some of the reasons why we could well see some moves today in just a moment. But this is the euro dollar trade, and we're bumping up against this line of resistance at 109.36, at 108.95. We're just a short distance away from that. If you get a break of that, we're then on the way up to the 110.30 level. So passing 110 is the next price target, I think, if we get a break of the 109.36. We've just seen German retail sales fell. These are monthly figures for February. They're down 1.3%, quite backward looking, but that's more than the 0.5% decline expected. And a bit later this morning, the unemployment rate's forecast to remain at 5.5% in the German economy. Now, in just a short while, we'll get an update on numbers from the French inflation figures at 1:15. Yesterday, you'll remember the German consumer prices coming in hotter than expected. I did a little bit on the markets about this, about the strength in the euro against the US dollar as a result of what we saw there. Europe's largest economy yesterday decelerating to 7.8% in March year on year from 9.3% in the previous month, higher than the 7.5, 7.4% anticipated. This triggered that reaction in the euro dollar. In a few minutes, we get the French CPI figure expected to fall to 5.5% year on year from 6.3% in the previous month. And at 10 o'clock this morning, the CPI for the Eurozone forecast at 7.1%. Now, the commentary around the German number yesterday was interesting. When you look at these figures in front of you at the moment on that graphic, just bear in mind that the German figures also decelerated, but they didn't decelerate as fast as expected. What we got in terms of year on year is the fact we've got a big drop in gas prices. Natural gas prices are down heavily, and this is soaking up much of that pullback in the inflation number. But economists are worried that that heavy lifting has now been done, and what we're left with is the residual inflation figures that are coming through, which are still keeping this inflation figure stubbornly high. And that is the message we got yesterday from economists following on from the German CPI. Could we get the same this morning from France and the Eurozone? Could we see that unwind of the big, strong number in terms of gas prices, but we're still left with that underlying inflation worry, which means that the central banks are likely to continue raising interest rates. A few macro indicators in the States today: personal income spending, core PCE prices, and the Chicago PMI. Now, let's take a look at what we got in terms of just one of the stories I wanted to follow up on what's going on in the markets for Netflix. I'll show you a chart on Netflix because yesterday it closed out with the stock all sessions on the IG platform. I'll show you this chart to give an indication as to what's been happening with Netflix. We're up and away. In fact, we've broken some resistance in the last few days at $332.57. 339.25 is where we closed out the session late last night. At 9 o'clock this morning, I'll be watching this chart because we've been hearing that Netflix has announced a restructuring in its film group to make fewer movies each year and centralize its decision making. Bloomberg reporting that Netflix will combine units that produce small and mid-sized pictures, a change that will result, it says, in a handful of layoffs and the departure of two of its most experienced executives. We've got a couple of those that could well end up out of work. The point I want to make here is the fact that this, I think, is going to possibly provide us with an upside trade at 9 o'clock this morning. I say that because the way I'm reading this is that it is cutting back on costs. It's cutting back on risk. It's not wanting to put its head above the parapet wall in terms of new movies. It doesn't have the vision, I don't think, at the moment to do this. It's more concerned about the investment returns, and it's more concerned about other parts of the business. So this could, I think, possibly result in a possible upside surprise to the share price chart this morning. That is, if that's the interpretation. If the interpretation is that there is now less vision, then there may be a little bit of softness in shares. It'll be interesting to see how this opens at 9 o'clock this morning. But the way I'm reading it is the fact that the company's cutting costs and cutting risk, which could end up in possible upside for Netflix at 9 o'clock this morning. It's all sessions on the IG platform. One of the opportunities to gauge the reaction in the market to this news out overnight. Now, let's move on to other areas of the market. I want to pick up on what's been going on in the oil market because we've seen oil coming through with gains as we go into the back end of the week. Today, we're consolidating at yesterday's high point. Reuters, citing 5 delegates, revealing this morning that OPEC Plus is likely to stick to its existing deal to cut oil output. The organisation is set to meet virtually on Monday. Last November, OPEC Plus reduced its output target by 2 million barrels a day. The same reduction likely to apply for the whole of 2023, according to Saudi Arabia's energy minister. One other thing we'll be watching out for will be the Baker Hughes rig count. Just to quickly remind ourselves of what happened last week, it rose by 4 to 758, entirely due to the number of oil rigs in operation, also up by 4 to 593. But of course, what's been happening in this week in the oil markets has been this move that we've got from both the EIA and the American Petroleum Institute, which each showed that there was a big decline in inventories, which means that demand is outpacing supply at the moment, which will please OPEC members because that, in theory, gives us a higher print for the price of oil. So every barrel they sell will attract a higher price in the market. Before we get on to soft commodities, I just want to show you one more market. This is the metals market, and I want to go just purely for gold. I won't touch on base metals today, but second day in a row of gains for gold at 1981 as we see that dollar weaken on the overall picture. So that's the situation we're in at the moment for some of those commodities. Now on to the soft commodity rally that we've been on about recently here at IG. Is this further evidence of climate change? Sugar rally continues. Now it's now at its highest since July 2021. I want to show you the chart first of all for London sugar and showing you this long-term chart that we've got here, where we're now peaking above the highs that we saw back in September 2016, now at levels not seen in this market since the 8th of August 2012. This push higher in the markets. Earlier this week, we were talking about how sugar production in the Indian state of Maharashtra, Thailand, and southern China, 3 of the world's top 4 producers, was in decline due to unfavorable weather conditions. Now the European Union says it expects a decline in production this season and the fall in the planted area for the 2023-2024 season. This could lead to a rise in imports. Some relief could come from Brazil. That harvest is now starting. That's London sugar. Let me just quickly show you what's happening with New York sugar, pushing higher, but this is at levels not seen since November 2016. I want to move on and take a look at more evidence potentially that we've got this concern rising around what's been going on in the markets for soft commodities because of the climate change. Yesterday, this is the trade in New York cocoa, ending at levels not seen since February 2021. Now, the problem there comes from tight supplies from the world's largest cocoa producer, Ivory Coast, where port arrivals have been running behind last year's pace. As we said here earlier this week, this is not a production issue necessarily. In fact, Ivory Coast expects good mid-crop, and Ghana, the world's second largest producer, is poised to produce a larger crop this season, but we're seeing increased demand there for that. This is what's happening, though, with orange juice futures. We've got a rise there to a record, an all-time record for orange juice. Hurricane damage earlier in the season and the citrus greening disease conspiring to cut supply from Florida. Worrying times for food producers as traditional crop locations find it difficult to meet demand. That's it. We're back at 10:30 with Charting the Markets. Do watch out for Netflix at the 9 o'clock this morning, all sessions on the IG platform. We're just getting some breaking news coming through, and the French economy for the figures out for the numbers on the CPI data in France, where I'm looking for the reading that we've got. We were expecting a figure of 5.5%. It's come through at 5.6%. Down from 6.3% in the previous month. This is the year-on-year figure. So, like the German economy, it's surprised on the upside, not by the same sort of margin, but nonetheless, it's coming in slightly stronger in the French economy at 5.6% year-on-year. We'll get that Eurozone number out a little bit later on this morning, confirming what we've been seeing, I guess, from both Germany and France, that we've got this big pullback in the figure from last year because of this drop in natural gas prices. But at the moment, at least, it's certainly looking as though we are seeing upside surprises coming through on inflation across the Eurozone. That's it. As I said, we're back at 10:30 with Charting the Markets. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.